Hi, I'm Brock Vandenberg, Fund Manager for Talamar Income Fund and President of Talamar Financial. Today, I wanted to answer a question that I get from a lot of investors, and that is, why would a borrower choose to work with a private lender like Talamar Financial over maybe a traditional bank? And then highlight that response with a recent success story that I think demonstrates the role private lending can play in today's real estate market. So in many cases, borrowers will come to private lenders for either speed or execution. Traditional banks have longer approval timelines, stricter underwriting requirements, and limitations around certain property types or construction scenarios. Private lenders are often able to provide more flexibility and move more efficiently, especially when a borrower is working within a tight timeline or dealing with a project that falls outside of conventional lending guidelines. At Talamar Financial, we've spent more than 15 years financing real estate investment projects throughout California. Our focus has always been on understanding the underlying real estate, the borrower's experience, and structuring financing solutions that help projects move forward while maintaining disciplined risk management. So one example that I wanted to highlight was what we call construction to completion loan that we closed in December 2024. The loan amount was approximately $2.8 million and was secured by a 6-unit, 3-building multifamily development project in Los Angeles. At the time we funded the loan, the project was already approximately 35% complete with construction. The borrower had initially planned to complete the project primarily using their own capital. However, after identifying another investment opportunity, they decided to recapitalize the project in order to free up liquidity while still completing construction. This is what we refer to as a construction to completion loan. Essentially, the borrower was already started construction and needs financing to complete the remaining work on the project. From a risk management perspective, we generally prefer to enter these types of projects after significant progress has already been made. Ideally, the exterior of the project has already been completed and the drywall has already been installed. At that point, many of the larger construction risks have already been reduced while still allowing us to provide financing for the final stages of completion. Now, in this particular case, we structured the financing with a construction holdback. That means funds were dispersed to the borrower over time as construction milestones were completed and verified. This structure helps ensure the project remains properly capitalized while also maintaining oversight throughout the construction process. The project has now been completed successfully, and the borrower has leased out all of the units as long-term rentals. One interesting aspect of the project is that each of the 3 buildings could also potentially be sold individually. Now, this gives the borrower multiple exit strategies, so they can hold the entire project as a rental or sell off individual units. This transaction is a strong example of where private lending can provide value. Because the project was partially completed, requiring flexibility and the need to close quickly, it would have been challenging to finance through a traditional bank. At Talamar Financial, our ability to evaluate the project, understand the borrower's objectives, and structure a customized financing solution allowed the borrower to complete the development and continue execution on their broader investment strategy. Now, it's also important to understand how these types of loans fit within our overall portfolio strategy. Construction-related loans, including construction to completion financing, currently make up approximately 30% of our portfolio. We believe diversification is an important part of managing risk within the fund. Rather than concentrating heavily in one loan category, we maintain a balanced portfolio across fix and flip loans, bridge loans, and new construction financing. That diversification strategy helps reduce concentration risk across different asset types, project stages, and borrower profiles. At the end of the day, our objective is to continue originating loans that are backed by quality real estate, structured with conservative leverage, and aligned with the long-term interests of our investors. If you're interested in learning more about Talamar Income Fund, our investment strategy, or the types of loans financed by Talamar Financial, we encourage you to reach out to our investor relations team. We'd be more than happy to speak with you about our long-term strategy. Thank you for taking a moment to watch. If you like this video, definitely give it a thumbs up. Consider subscribing to our YouTube channel, where we post a lot of great content about investing in mortgage funds, trustees, and the general real estate market. Thanks for watching.